All right, so we're recording. All right, so let's look at the. Let me share my screen so we can check out the economic calendar together. All right, so this is Market Watch. This is a good website for knowing. Oh, it's reloading. All right, there we go. So it's a good website for knowing what's happening in the week. Once you start getting more into trading, you want to know what type of information is coming out during the week. So for this week, we can see that on Monday, we don't have anything happening. So anyone that's setting up trades, you should be good to go unless there's some particular information coming out on that particular stock you're trading, the individual stock you're trading. Tuesday, we don't really have anything that stands out. Wednesday, we do have Jerome Powell speaking right here at 2:30. For those that don't know who Jerome Powell is, he is the chair of the Fed, of the Federal Reserve. And right now, his job is to combat inflation. So inflation peaked, I want to say, in June. And his job is to get inflation back down to around, I want to say, 2%. I think that's his goal. Inflation at one point was like 8%. And it was, 8%, I think, year over year. So his job right now is to get inflation down, but to not crash the stock market while getting the inflation down. So a lot of people who are investing in stocks are paying attention to this time and date. Again, on Wednesday at 2:30. 1 second, someone is joining. All right. So again, Wednesday at 2:30, you want to pay attention to the stock market. You can pay attention to the major indexes. So I would look at the S&P 500. That's my favorite index. And just watch the S&P 500. So if you're looking at Robinhood, you can just type S&P, or you can type SPY. That's the ticker. It will pull up the stock. And around 2:30, while Jerome Powell is speaking, you can see if it's going up, if it's going down, but it's going to be very volatile on this day because people are wanting to see what is he going to say. Is Jerome Powell going to increase interest rates, which makes it more expensive for consumers to borrow? So it'll make it more expensive for us to borrow anything, or is he going to take it easy on us and not implement a large interest rate hike? So the last interest rate hike he implemented was a 0.5. This time we're hoping for a 0.25. That means he's backing off a little bit. But again, I mean, nobody's in the brain of Jerome Powell right now, so we don't know what he's going to do. But Wednesday at 2:30 in the Discord, I will post a link to the actual video. We can watch it together. If you have any questions, let me know. We also have initial jobless claims. So the Fed, they want, and I know this sounds crazy, they're using a metric to where the more people that are put out of their jobs, the easier it will be for us to tame inflation. So right now, that's not the case. We have a very strong labor market to where people aren't losing their jobs as quickly as the Fed thinks. So Thursday is going to be an important day to watch as well, around 8:30. And Friday, we don't really have anything that's standing out. We do have the PMI, but by that time, we'll have already heard from Jerome Powell on Wednesday, and then we'll have the initial job claims on Thursday. So that's just, again, this, if you're new, you're probably like, okay, this doesn't pertain to me. But once you get into positions, like for instance, if you're investing in Apple, if you're investing in Microsoft, you're investing in the S&P 500, you're going to want to know this information because, again, whatever he says is going to either push your stock up or bring it down. And you need to know what to do around that time. Do I have any questions? And what I'll do is I'll give you this link. And I'll put this link in the chat. Put it in the chat for those that need it. And check it out.
Thank you.
You're welcome. All right, so let's do the indicator breakdown. So let's look at the S&P 500. I like to look at the SPY You can also look at the SPX. A lot of people like to look at the SPX, but I think the SPY is probably more popular, and a lot of people like to trade it. It receives a lot of volume, so I like looking at the SPY. All right, and we're just gonna show the basic indicators that I have. We're not gonna go into any I would say complex indicators. All right, so if this is your first time looking at this, I know you're like, okay, you know, what the hell am I looking at? But that's okay. We're going to break down everything. And if you have any questions about anything that I cover, let me know. But by the time we get to the bottom of this page, everything should make sense. All right. So at the top, this indicator, this is your RSI. This is your relative strength index. Your RSI is simply going to tell you if the stock is overbought or underbought, right? So if the stock is overbought, that means that it's going to be close to this 70 line, right? So 70 is up here. If this purple line, so right now the purple line is at 61.58. If it's close up here to 70, that means that the stock is overbought or becoming overbought. And what does it mean when the stock is overbought? It means that you probably don't want to buy it, because once it reaches 70, it's going to pull one of these moves right here. It'll get up to 70 and then it's going to cool down and come off. So if you're playing options, then this is a different conversation, because if it reaches 70, you just can jump into some puts. You can play a put to the downside. But again, this RSI, this chart, this line is just simply telling you if the stock is overbought or underbought. Overbought, close to 70 or 70. Underbought would be down here around 30. So you see that this goes from 30 to 70. If this purple line was pointing down and is hovering around 30, that means that it's oversold. That means that people are selling the stock too much. I like to say that the stock is cold. And if it's close to 70, the stock is hot. So how would you use this in a real life situation? If someone was to tell you, hey, I've made $10,000 from the S&P 500, I think you should go ahead and jump in. The first thing you want to do is check your RSI. You check the RSI because if they've made that much money, the RSI may be climbing to around 70, which means that they've already made their money, and it may not be enough room for you to make your money until it cools off. And you want to wait till that RSI cool off. So for me, I like to get in around 45 to 55 RSI pointing up. So if it's a 45 to 55 RSI, for instance, when the RSI right here reached up to about 60, it came down and then it started to point up. And it's at 53.75 right now and it's pointing up. I would have entered in right here, checking my other indicators, not solely off this one. I would have entered in right here. And then once it gets up to around 60, 65, I can choose to make an exit. Oh, someone else is joining. 1 second. All right. So, but yeah, so that's how you use the RSI. Again, you want to make sure that you're understanding what the position of the stock. So again, and we're looking at this on a day chart. So I'll explain what that means in just a second. But again, the RSI, to make it simple, is telling you if the stock is overbought or underbought. And if you want to break it down even more, is the stock hot? Is the stock cold? If the stock is too hot, you probably don't want to touch it. You want to let it cool off, get around 40 to 55 RSI pointing up, and then you can go ahead and enter the trade. Do I have any questions about the RSI? All right, cool. I'll take silence as I know I don't have any questions, Ladarius, and I'll keep moving. All right. So let's look at the body of the chart. This is the quote unquote confusing part. All right. So this is the body of the chart. What I'm going to do is break it down by each. I'm going to tell you what everything on this chart means. All right. So since we're looking at the day chart right here, you can change it to, see, that's 1 day. So you can change to 1 week, 15 minutes, 1 minute, whatever time frame. But I recommend if you're new, starting at 1 day. If you want to swing trade, which is just buying the stock low and selling it high, starting on the day chart works. Also, if you want to trade options, trading it off the day chart and holding the option for 2 or 3 weeks, that works as well. You can also look at the weekly. But what does this 1 day mean? The 1 day simply means that each one of these candles, so each one of these little rectangular objects on this chart, they represent 1 day. So if I was to change this to 1 week, each candle, each rectangular object represents 1 week. So whatever you set it to, you can set it to 1 second, 30 seconds, 15 minutes. It's going to represent 1 unit, right? So each one of these is 1 day, because we're looking at the day chart. The way to read these candles, and I'll get into all the lines, but the way to read these candles is simple. If it's green, it opens at the bottom and it closes at the top. So let's get a clean candle right here. So if we're looking at this green candle right here, right, it opens down here. So it opens, and the way you can tell what price point is at is if you hover over it, you can look out to the right. Where is it at? Out to the right, and you can see that it's about 95.77. That's where it started at, right? Since it's green, that means that the stock price is going to move up, and it's going to build the candle up during the day. So it's building it up during the day. So now we're at 407 on this candle. So in 1 day, it went from around 395 up to about 407 on this candle. So that tells you that the candles at the beginning of the day is going to start at the bottom, and then it's going to build up. And at the end of the day, it's going to close at the top. Now, when you look at a red candle, it's going to do the opposite. So if you're looking at a red candle, that means that it opened up here, and instead of climbing up to build a green candle, it decided to go in the opposite direction and build out a red candle. So anytime you see a red candle, it's building down. A green candle is building up. That's the easiest way to look at it. So that helps identify, that's going to help you identify trends. And then once we get into, like, later on in the year, once we get into like strats, like the strat method of trading, then it's going to help you identify, like, okay, 2 and 3 and 1 candles. But don't worry about that right now. Just know how they open and how they close. Green opens at the bottom, closes at the top. Red opens at the top, closes at the bottom, because it's pulling the stock price down. All right. Now, all the scribble scrabble on the screen. What is that? All right. So let's start with this green line and this red line. So the green and red lines are my moving averages. All right. So what is a moving average? A moving average is simply the average stock price over a given period, right? So my green line, I set it to, and I'll show you. So the way that you can get this indicator on your chart, and if you need help setting up your trading view and you're in the Discord, only thing you gotta do is send me a message, and I can give you a replay of this. But the green line, again, this is my 200. So when you look at the indicator, this is my MA cross, because it's giving me 2 moving averages. Let me show you how to set it up. So if you click on settings, you look at the input, my short length MA, so my short moving average, which means my shorter time. Again, because your moving average is just the stock price over a certain period of time, right? So my short MA is going to be 50 days, right? So I put 50, and we're on the day chart. So that means that my red line is going to be 50. That green line, my long MA, is going to be 200. So I have a 200-day moving average, and I have a 50-day moving average, right? Because this is how I set it on my MA cross. And you can pick the MA cross by clicking on indicator, type in MA cross, and here it is right here. You can click it, and then once you click it, you get it on your chart. You hit the cog wheel, go to input, and then you can set it up. I like a 50 and a 200, especially when I'm looking on the day chart. Some people like a 9 and a 21, a 21 and a 200, so on and so forth. Once you get into trading and investing, like, deeper into it, you're going to find that you need different moving averages for different things. Like if you're looking at holding a stock for, I don't know, 3 to 5 years, you may not even need a moving average. You may not even need to look at it, because where you're buying it at now, it should be way higher in 5 years. So you don't even need to look at the moving average. But if you're trading, you're going to want to set up your moving averages. So the green line, again, that's my 200, right? The red line is my 50, right? So I have a 200-day moving average and I have a 50-day moving average, right? So let me click off of that. So if we look over here, if you look at the MA cross, right? This is going to tell you when you hover over a certain period, it's going to tell you your green and red. So your green is your 200-day, and then your red is your 50-day. So you don't have to click into it to find the actual price. If you just hover over it right here, you hover over the last candle, and you look over to the left, you see that the 50 is around 393, and you see that the 200 is around 394. It just tells it right there in plain text. All right. So why even use a moving average? What is it important for? So the moving averages are places to where a lot of traders or investors like to set algorithms. So they'll like to set entries and exits around these points, because think about this. All right. If we look at the 50-day moving average and the stock is above the 50-day moving average, that means that the stock is performing better than it has been within the last 50 days, which for an investor or a trader, if you see, okay, the stock is doing better than it has been, over the last 2 months almost, okay, that may be a good sign that the stock is going to keep going up. And then when you look at the 200-day moving average and you say, okay, so this is a little bit over half a year. It's doing better than it has been in a little bit over half a year, right? That's another good sign. So since we're looking at the S&P 500, we see that the S&P 500 is above both the 50 and the 200. So that tells us that the stock is performing better than it has been in the last 50 days and the last 200 days, which tells you, okay, the stock is in a good position to keep moving higher, unless, I don't know, God forbid we go to war, or we go to war with China, or something crazy happen, or Jerome Powell comes in and, tank the market. Something special would have to happen. So this is how you use your moving averages. When you're looking at different charts for different stocks and you have your moving averages set, you want to say, okay, is it above the 50? If it's above the 50, that means that in a short term, it has been performing well because it's over its 50-day moving average. For the 200, if it's above its 200, that means it's performing better than it has been in a little bit over a year. So that's another good sign. A lot of people, when they see a stock's price above the 50, they like to go ahead and get in. And then once it gets above the 200, in this case, they'll go ahead and add more money in above the 200, because that means that now it's bringing that 50 above that 200. So it's bringing this average up. I'm not going to explain what that means right now because I know it may be a lot to take in if you're new, but it's called the golden cross. You have time, you can look it up later to see what that means. For my people who are a little bit more advanced, a golden cross is definitely a good thing. When you get to 50 above the 200, that's really good for the stock. All right, so we covered the candles, the rectangular objects. We covered the lines, right? We covered this 200. This is the 200. This is the 50. Again, before you invest or jump into a stock, you want to see that it's above its 50. It could potentially be above its 200 as well, depending on which stock or which sector you're looking at. And we also covered the RSI. Remember, conditions for the RSI, you want 45 to 55 pointing up. That's where I like to do it. You might find, I don't know, some people like to ride on the edge and say, 60 to 70 is where, where I like to have my zone. But for me, I like 45 to 55. As you continue to trade and invest, you'll find your own space. But all right, so we covered most of this. All right, now the blue lines, what are they? The blue lines are simply your support and resistance lines, right? So what does that mean? Your support is going to be the floor. So stocks won't go from 0 to 100. I mean, 0 to $1 million in one day, and stocks won't go from, zero. I mean, from 100 to 0. So there are certain stops that the stock is going to make, whether it's going down or going up. How do you find those stops? So the way that you find the stops or the checkpoints that the stock is going to check in at is by locating its support and resistance lines, right? So support, think about support as the floor for the stock. Like if you're on your computer, if you have a table that's holding up your computer. That's going to act as your support. So that's the floor for the stock, right? And then the resistance, think about the resistance as the ceiling, right? So now you can identify a trade range. Now you can say, okay, is it coming up off the floor, and how much space do I have to the ceiling? That's going to help you identify, is this a trade that I want to take? Because if you look at a stock and it's right up against its ceiling, you may say, okay, I'm going to wait until it breaks through the ceiling or bounces off the ceiling, right? So let me give you an example. So I picked, oh, well, let me backtrack. I'm going to tell you how to place your lines on the chart, right? So the easiest way to place your support and resistance, you place the lines the same way, is that you find where the stock has touched a certain price point and then change directions 3 times, right? Sometimes it's going to happen 10 times. If we look right here, we see that the stock, it touched up here. It was coming down on these, 4 red candles. So red candle down right here, a red candle down, another one down, down, and down. But then what happened? Once it got past a certain price, it rejected. So we got 2 green candles up. It came down. It tried to break below that price again. What happened? We got a green candle. It tried to break that price again. What happened? Another green candle. So you see that the stock was dropping before it got to this point around 380, 381. So that tells you that, hey, okay, 380 is a zone that I need to place my line at, because every time the stock tries to go below, it's starting to bounce off of it, right? It's starting to react around that price point. So that's why I placed this line right here, because it's support. Support, again, is like a sturdy table that's holding up your computer. And then when I'm looking for my ceiling, so now we have a defined floor. Now we need a ceiling to show us a trade range, right? And you can have multiple, again, once you get more into trading, you may have multiple floors and multiple ceilings as you identify levels for the stock. So right here, this was a ceiling at one point in time, because you can see that the stock eventually, it tried to go below, it couldn't, and it gave up and it bounced off of that floor. And it went here, it turned down on this red candle, and then it went up and broke, right? So it went up, it checked in here at about, what is that? About 390. It popped through, but then it decided to come down. Coincidentally, it checked in right at that same point around 390 again, and then we got another bounce to the upside. Also, if you look back, you can see that the stock, even right here, when it was around 390 back in September, it checked in right here. Again, September, it was around 390, it checked in. You even look back here, the stock was going down, it checked in. So that tells you, okay, cool, we got a good resistance set. The stock broke through, it got above it. So now this ceiling just became the floor. It's like standing on top of your house, right? If you was to just jump, straight up through your ceiling, now you're standing on top of your ceiling, which now your ceiling is your floor, and you're looking up to the next level, right? So this resistance became our support. Now we're looking for, all right, what's the next ceiling? I put this ceiling up here, this resistance line up here as a waypoint. You could find one right here. It's a little bit lower at about 400. You could have found one right here that was at about 395. I put it at about, was it 408? Because I seen as a waypoint, we haven't cleared this in a while, right? If we look back on all these candles, again, one candle represents a day. We haven't broke through this, in a while. We've tested it a lot. We went up, we tested, rejected, went up, tested, rejected, and now we're testing again. Even back here, we actually broke through and then we rejected again. So 410 is definitely going to be a good line to beat for the S&P 500. And if you look back here, look at that. It tried to go below 410, and it just bounced right around on the top before breaking through. Right here, bounced around on the top before going up. When it came down, it broke through. It tried to go back up on this to reach back up, and then it just kept going down. So that's how you're going to set your support and resistance to give you a trade range to show you, okay, this is where the stock is fluctuating in between. I can find my entry. and I can find my exit. So if you're buying, we're not talking about options. If you're buying shares, you want to enter when it's close around the support. So for instance, this stock dropped, it bounced off. You can trade on this next candle, right? You may not want to trade on that candle because it's kind of risky, because it could turn around and go through, it could break the support and go down. But you use this candle as confirmation. It went down. You say, okay, I want one candle to confirm that it's changing directions. It changed directions. On this next candle, you could have got in and then stayed in for these other 2 green candles, and you see it would have took you up, and then you could have got out right here. So, and this helps on any time frame. So we're looking at it on the daily, but as you continue to learn how to trade, you want to day trade. I use the same technique, even day trading. I may use different time frames. Like I like to trade a 45 and a 15 and a 5. That's a little advanced, but with this same setting your support resistance, checking the RSI, I use the same strategy regardless of what time frame I'm looking at. Do I have any questions? We've covered a lot. I want to stop and check in, make sure everybody's good. Do I have any questions?
How often do you change the resistance checkpoint, or does that depend?
For the S&P 500, honestly, I haven't changed this line in a while. I put this line here, I don't even remember how long ago. It depends. It depends on what time frame you're trading. For instance, I got this line right here around 408. If we break through 408 and move up to 410, I'm going to need to find another ceiling, right? So then I can find one right here at about 415. I can find one up here at 420, or I can put one all the way up here at 430. So it depends on how you're tracking the stock and what you need the stock to do for you. So again, if you're just swing trading, buying shares low, selling them high, you want to wait to see what it's going to do around this resistance, because it doesn't have to break through. It can hit up against it and come down. So you want to pay attention to what's going to happen around here. If it breaks through, cool. You go ahead and set another resistance.
Thank you.
No problem. Any other questions? I think I had a question in the chat. Oh, someone raised. Adam, you raised your hand?
Yeah, you can hear me?
Yeah, you're good, man.
What was those time frames you said again for day trading? I think you said 5, 25, and 5 again.
Yeah, I use a 45, 15, and 5. So
45, 15, 5.
Yeah, I use a 45 when the market opens, because when you're day trading, you only want to be in a trade for about an hour, maybe hour and 30 minutes or less, if it doesn't go your way. And then I like to use a 15, because 3 candles on the 15-minute chart is going to equal 1 candle on my 45, right? So when you're day trading, you only need to be right for a certain amount of time. And then I like to use the 5 as backup to see what's going to happen on my 15, because again, 3 candles on the 5 equals 1 candle on the 15.
Okay.
That help?
Yeah, that makes sense.
Okay, cool. All right. Any other questions before I cover and the rest of this is easy. But this is like the meat of everything. Do I have any other questions before I move on? Again, I'll take silence as a thumbs up, and I'll keep moving. All right, cool. So let's keep moving. The bottom, this right here, this is really simple. This is volume. It's over here. It's an indicator. You can click the indicator, you search VOL, click volume, and it's going to add it to your chart. So volume, what is volume? Volume is just the amount of trades that are happening in any given time period. So since we're looking at the day chart right here, each one of these bars represents the volume on one day. Why is this important? Well, the volume, the size of the bar is not as important as the color. So the color is telling you if it's buying volume or selling volume. Again, this works on any given time period. I'm just using it on the day. So again, a lot of people like to say, okay, well, the stock had a lot of volume on the day. I'm going to jump in and, the stock is going to go up. That's not true. If you look at this right here, this area, we have 4 red bars. All of them are high, relative to these bars, but they're all red. When you look at the stock is tanking. So if you were to say, okay, a lot of trades are happening, the volume is high, I'm going to jump in, the stock is going to go up, you'd have lost a lot of money because you misread what it meant. High volume doesn't equate to the stock going up. High volume just represents volatility, how volatile the stock is, how fast it's going to go up, how fast it's going to come down. Green means that it's buying volume. Red means that it's selling volume. Anywhere you see red on the volume chart, you can literally draw a line straight up, and it should be a red candle. All right, we got 3 red candles right here, 1, 2, 3, and we got 3 red volume sticks right here. We got about 5 or 6 green candles right here, 5 or 6 green bars for volume right here. So again, it's pretty simple. Volume, don't worry about how much volume it is. You want to know, is it buying, is it selling? Once you get into options, if it's selling, you need to know. So then you can set up a put. If it's buying, you need to know, so you can set up a call. For people that are just buying shares low and selling them high, you want to make sure that this volume is building out the way you want it to build out. So you want to make sure that, okay, there's a lot of momentum as far as buying the stock, because we have a lot of green candles, right? I mean, a lot of green volume bars right here. Again, all of these indicators are going to work together. So when you check, again, you check the RSI, 45 to 55 pointing up. How are we looking? Do we have any space to go up to 70? Cool. You check the chart. Where is the stock in respect to its moving averages? Is it above the 50? Is it above the 200? The next thing you want to check, okay, where am I in regards to where I set my support and resistance? Are we close to resistance? Are we close to support? And then when you check volume, is okay, how much volume are we getting? And then what color is the volume? Is it buying? Is it selling? And how fast is it coming? So again, I use the same strategies on different time frames, but that's volume. These little D's at the bottom, they just represent dividends. So if you click on them, it's just going to tell you the dividend. The S&P 500 pays dividends, and it's just going to tell you the X date, the amount, and then the payment date. So the X date is just the date you need to be in before. So you need to be in before before Friday the 16th of December in 2022 to receive the payment on Tuesday the 31st in January, right? That's all it's telling you with the little D's at the bottom. If you see an E at the bottom, an E is just going to tell you the earnings date. And then if you see this little lightning bolt, that's the headlines for the SPY. If you click more news, it's going to break it out into headlines. So again, this is really good for people who are new and people who are trading options as well. If you need information on what the stock is doing, or you want to read through some articles on, is the stock good, is it bad, click the little lightning bolt, hit more news, and then read it along the side right here. It'll give you all the articles you need. You can read them and make your own decision on if you want to invest or not. Again, this is tradingview.com. I know a lot of people that started with us a year ago. We were doing stockcharts.com. You can do that as well. I just think that TradingView is a better platform to grow and learn on at this point in time. So, but again, simple stuff. Volume, D is dividends, lightning bolt is pretty much news. All right, MACD. This is a really, really good one. All right. So what does the MACD stand for? The MACD is the moving average convergence divergence. Sounds scientific. It's really simple. It's telling you the type of pressure that's on the stock. Wait 1 second. Someone's trying to join. All right. Let that person in. All right. So again, this is your moving average convergence divergence. It's telling you what type of pressure is on the stock. So you got 2 types of pressure. You got buying pressure and you have selling pressure. Buying pressure, just like buying volume, is going to be green. Selling pressure, just like selling volume, is going to be red. I'm sorry, I had a Discord notification. Jay, you should be good to go. I just let you in. I got your message. But yeah, so the way that you read this is no problem, Jay. The way that you will read this is that you want to pay attention to the way that these lines interact, right? So for me, I have it set up. You can change the colors of the line if it makes it easier for you. Oh, wait, let me back up. So if you want to add this to your chart, again, indicators, what you're going to do, MACD, and you want to pick this one. Later on, if you like the MACD strategy indicator, you test it out, you can use it, cool. But for starters, moving average, convergence, divergence is going to be the one to add to your chart. And again, it's just telling you buying and selling pressure. So you see it's two things happening, right? You got this chart behind the lines, and then you got the lines. Which one to pay attention to? I would pay attention to the lines first, because what the lines are telling you is this. If blue is on top, right? If this blue line is on top of the red line, that means that the stock has buying pressure. It has pressure to go up. If the red line is on top, that means that the stock has selling pressure and it has pressure to go down. For instance, everything on these charts are going to be red from the right-hand side at the end, right? So this blue line is on top. So that means that the stock has pressure, has buying pressure. So the pressure to buy is up. If you look up, the stock is moving up. If you look at the volume is green. And if you look at the RSI is moving up. So the MACD, again, is just telling you pressure. Now, again, if red, let's look at this red being on top. Red was on top for a while. If we look up, for the same time period, the stock had down pressure and is moving down. Now, you will get some spikes. You know, this little spike up right here. Blue was almost on top, but then it just gave up and dropped. So we had this spike up here, and then we just had another drop. So red stayed dominant. During the period that red was on top and red was dominant, the stock was pushed down. And then when blue crossed over and blue became dominant, what happened? The stock bottomed out and the stock started to move up for as long as blue was dominant. Now, the special thing about the MACD is that when you have a MACD crossover, the stock is going to have a knee-jerk reaction in the opposite direction, right? So let's pay attention to this. Blue is on top for this stretch, right? So the stock has pressure to move up. Red is trailing, red is behind it, it's close, and red finally crossed over. So this is called a MACD crossover. When that MACD crossover happened, that means that the trend changed. I know a lot of people like to be able to identify the trend of a stock. The MACD will help you do that. So the trend changed right here. Now, instead of having an upward trend, it's now starting to move into a downward trend. Look at what happened. When it crossed over, we got this long red candle. Again, this all happened in one day. So in one day, it went from almost 420 all the way down to 406 in one day. Again, that MACD crossover brought it down. And then when you look over here, let's use this area. The MACD was tangled up. Blue ended up winning. So the green side, the buying pressure ended up winning. It took us for a ride, but look at this. When it crossed over, it gave us, again, you're going to get a knee-jerk reaction. It may not be as big as this candle right here, and it may not be as big as that candle right there. But when it changes momentum and trend, you're going to see a spike either up or down. And this, for people who like to trade options, this is where you would like to get in. You would like to get in around the time that a MACD crossover is about to happen, either to the upside or downside, because you need volatility and you need a price spike for your contracts because you're dealing with time decay. But yeah, so a MACD crossover is what's creating these pops, right? And so another thing is that if you're in, let's say you're just buying stocks, right? You're not trading options. If you're in a stock and you see it going up, like you would have bought, let's say the S&P 500 around this area, and you see it going up, and you're like, okay, I've made some money. Where do I get out at? Like, how do I know to get out? All right. If you look at this MACD, and the MACD is about to cross, like this red is getting close to the blue, and it's about to cross over. As soon as that red crosses over and it starts to create the downtrend, the stock is going to go down. So if you need to know, like, okay, where do I need to get out? I like to get out before the MACD crosses over to the downside if I'm buying a stock low and selling it high, because I want to get out at that peak, right? So, and it's not cookie cutter, so it's not going to work that way every single time. But for the most part, if you keep an eye on the MACD and see, okay, is the MACD going to cross over to the downside soon? And if it is, how long is it going to take? Okay, let me go ahead and take profit, right? And that's going to help you identify, again, people like to identify entries and exits. The MACD is going to help you with that. Draw your support and resistance is going to help you with that. And then paying attention to your moving averages. Also, your RSI. So all of this is going to help you with entries and exits. It's just paying attention to, okay, what levels, and then what's the quality of a trade, right? The quality of a trade is determined on how many of these indicators are saying the same thing, and are they telling me that the stock is moving up if I needed to move up, and is it moving down if I needed to move down, right? So that's the MACD. The MACD is real important, especially if you want to move into calls and puts in the future if you're new. Do I have any questions? And again, the more you see this stuff, the more to stick. When I first started trading, I was just buying stocks. Like like paying attention to the technicals. I was buying stocks, but I was losing money because I would buy something at a good time, but then I didn't know where to get out. Or I would buy something, and as soon as I bought it, it would start going down. And I'm wondering, okay, how can I figure out when can I start buying a stock and it doesn't drop immediately, as soon as I buy it. So all of this is going to help you with that. Do I have any questions before I hand it over to Mark? All right, cool. I'll take silence as a no, I don't have any questions. And I'll go ahead and hand it over to Mark.
Appreciate that, Ladarius. Give me a second to share my screen. All right, so the pattern I'm going to go over this week is the rising wedge stock pattern. So what are they used for? Rising wedge stock patterns are basically used as a indicator to indicate a trend reversal. And what I mean by that is basically saying that a stock price that was once going up in value is getting to its potential peak and it's going to start to decrease in value, right? So we have here stock price started at a low point and it kept continue to go up and up and up in value. And once it reaches its peak, you're going to see it start to turn around and trend downwards. Okay, so that's one way you can signify rising wedge pattern. It's also used to help you with your exit points. Excuse me. So you can use it as like a target price. So for instance, if you initially bought into this company at $756 at this bottom, and you've seen the stock price rise up and it got all the way up to about $790, and you're like, I don't know when to get out of my trade. Well, you see this pattern forming. Once you start to see it break down and start to decrease in value, like you have here, this is a good indication, okay, you can take profit, maybe shave all profits, or you can get out the trade completely and take your profits, right? All right, and then another way you can use this pattern is you can use it for option trading. So you can use it for option trading with calls or puts. If you want to use it with calls, it's going to be a little bit more aggressive because you're going to be trying to predict the trend. I have a question. Someone has a question? Okay. So if you was using this as a call option, again, you're going to be trading a little bit more aggressively because you're trying to predict exactly what's going on in the trend. And the way that you would do that is once you see this pattern start to form, so let's say you see this stock price going up, it touches this bottom here, it decreases in value as we see here. The stock price is going down in value. Once it touches this area and starts to trend back upwards, you can get into call options here and try to predict where you think the price is going to go. So, right. So if you was to get in a trade here, we know two things. We know that we're potentially in a rising wedge pattern, and we're going to talk about exactly how you can distinguish a rising wedge pattern in the stock. But if you're in this rising wedge pattern, that's the first indicator. And then the second indicator is, we know we have a resistance line. We know at this peak, this is our resistance area. So you can use that if you want to do a call option as your target price, right? So you can say, okay, we got in our trade here. I'm gonna make my strike price at about 782. And once the price gets to that area, I'll sell the option and make profit. So you can use it like that if you wanted to do a call option. The other way you can use it is doing a put option. And if you don't know what a call option or put option is, a call option is just basically you betting that the stock price is going to go up in value, and then a put option is you betting that the stock is going to go down in value. That's like the simplest way that I can explain it. But if you want to do a put option on this pattern, all you have to do is wait for this stock price to break down in value or go down in value, and then you can get into your put option, and you can use these other support or these other touches as your strike prices. Okay, and I know that probably sounds very confusing, but as I go through the examples and the live demonstration of like how it looks to distinguish this pattern, it may make more sense to you. But before I go into that, does anyone have any questions? All right, good. All right, and then before I get into the demonstration or the rest of the PowerPoints, one thing when I first started trading that I learned was that you need to have a checklist when you're about to get into a trade. And what I mean by that is just a few rules that you do during each trade to make it profitable, or make your likelihood of being profitable higher, right? So with my checklist, I have things like Ladarius talked about, the RSI level. So let's just say someone told me, hey, I have a stock. Let's say they was looking at Tesla. Hey, I'm in Tesla. I think you should get in it. Well, before I even get in the trade, I'm going to make sure that Tesla is checking off every single one of my checklist boxes that I made. And the first one would be, I would look at the chart, the technical analysis of it, right? So I will first look at the RSI level. I will look to see if it's being oversold or if it's being overbought. Where's the level at? Then I will go into the other indicators, and then I will try to find a pattern, like a weekly pattern. And again, these patterns are going to vary from stock to stock. You're going to see different patterns on different stocks. Sometimes you may see the same pattern, but I will have a checklist for that as well. That's my second checkoff. And then thirdly, I will have a checklist to where I'm looking at news articles, I'm looking at the CEO, I'm doing research on the company, looking at the financials to see if this is a good company to buy into. Okay, so that's just my little checklist, and I learned having that checklist kind of helped me when it came to trading. Like I became more profitable once I started to use that checklist, and I became more consistent at winning in my trades. All right. So okay, so for this, and just like that same checklist that I had when I'm getting into a trade, even when you're doing patterns, you also have a checklist that you want to check off for each one of the patterns you have to make sure that the stock price is actually completing that pattern. All right, and so like we mentioned earlier, for the rise and wedge pattern, the first thing that the stock needs to be doing, it needs to be going in the uptrend, it needs to be going up in value. All right, so again, we have the price here. This is a previous price of about $30. And then when we're looking in the future, or when we're looking in the present time, as we're pretending this is the present time right here, when we're looking in the present time, the stock price is $57.50. So in the past, it was $30, and now it's at telling us that the stock price has been going up in value, so it's in the uptrend. Okay, so that's the first rule that you want to have. You want to see an uptrend. The next rule is, like Ladarius talked about resistance and support lines, he drew a horizontal line, right? So he drew a line straight across the screen. With the falling wedge pattern, the way that the resistance line and support lines fall is they go in a diagonal direction, right? So they're sloping diagonally. And with this, you want to see the stock price touch this resistance line at least 3 different times. It can be 2 times, but for the most part, you want to see 3 touches on this line. And then each time the stock price is touching this area, you want to see the price going higher and higher than the previous touch, right? And what I mean by that is, as the stock price was going up right here, it touched our support line. You got a question, Adam?
No, I didn't mean that.
Okay.
Touch that.
You have this support line right here. You have this resistance line. You have this touch in this area. This is our first touch. Stock price went down, then it started to go back up. The second time it touched this area right here, it is higher than our previous touch, right? So you see the stock price right here is at about $50, I want to say, and down here was at about 42. So this resistance area is getting higher and higher, and then the same thing for the third one. The third one is going to be higher than the previous ones as well. So right here we have it testing at about $57. Okay, so that's for the diagonal resistance lines. Then next, this is the third rule with this pattern, is the support line. So you want to have a diagonal support line, and it follows the same rules as the resistance line, 3 touches, and each time the stock price touched this area, it's making a higher high, right? So it's getting higher. It's high right here. It's got a high right here and a high right here. So it's increasing in value on this support line. And once you have those 2 lines drawn out, more than likely, you're going to have this cone shape that forms, right? So you're going to have your resistance area and your support line come and connect with each other, and that's the cone shape. And more times than not, the stock price isn't going to keep trading in there. This is when it's going to break out. So once you see this cone shape form and the stock price breaks out of that support area, this is when you should start trying to get into your trades, right? So you may get in on this candle, this red candle here. You may wait until it try to retest that area. And once you see it retest that support line, you should be getting in your trades here, or you should be shaving profits. So if you invested in this trade down at this area, again, once it's up here, you want to shave profits. If you're looking for a put or do an option and you want to do a put option, you're looking to get in once you see these red candlesticks you see here. Does that make sense? Do I have any questions?
Mark, this is over a period of time versus the previous charts, which were for 1 day, correct?
Yeah, so this is still a daily chart. So it is. Okay. Candlesticks represent 1 day, and on this one you can see it right here.
Okay.
This parentheses is saying daily, so this is on the daily chart. So yeah, each one of these candles represent a day.
Thank you for clarifying.
Yeah, no problem. Any other questions? That was a good question too.
I was looking at the bottom, see where it says September 7th through like December.
Yeah.
That's what tripped me up. Thanks.
Yeah, so these are just a week. Like they just breaking up the candlesticks in weeks. So about a week time frame. So this probably is the beginning of the week for it.
Thanks.
Mm-hmm. All right. So once you have those 2, again, it's going to create a cone shape, and that's when you'll be able to signify that's when you'll be able to signify that the stock is going to be going down. And another thing to note is that when you're looking at these patterns, don't just rely off of the pattern itself, right? So you want to also look at those other indicators that Ladarius talked about earlier. For instance, the RSI level, you want to make sure that the RSI level is looking good, like especially for this rising wedge, the way that the RSI level should be pointing downwards. So I remember Ladarius says he likes to get in trades when he sees the RSI level pointing up, and that's if you're looking for the stock price to rise. But because you'll be doing put options with this or shaving profits, you can get a good indication if the stock price is going to go down in value if this RSI level is pointing downwards and is getting relatively close to 70, or if it's above 70 or relatively close to it. It just needs to be pointing downwards. That's a good indication. And then you want to look at the MACD, like he spoke about earlier. Anytime you see the black line under the red line, that's signifying that the stock is going to go down in value. So it's going to be in the downtrend. And that's what you'll be seeing here. So you have this breakout that can potentially happen. Stock price is going to go down in value, and you can play off of that, right? And so let me go back. All right, so, and then once you get into it, right? So once let's say you're doing a put option and you want to figure out, okay, what's a good strike price? What I like to do is I like to use my support lines and resistance areas, those key touches, as my target prices. So let's say when the stock price breaks out, if it's under this resistance line, I'm going to be looking at my next support area, and I'm going to treat that right here as my next target price, and vice versa. I'll just keep breaking down and down and down. So I'll just treat each one of these lines as my support lines, and I'll draw horizontal support lines on. Okay, and as you can see, once the stock price broke out and started to trend downwards, you can see that each one of those support lines, the stock price at least tested it and tried to rejected off of those prices, right? So we have right here, as you can see, this candlestick closed right on the support line. It broke under it. You see here, it broke under, came back up and retested it as well. So that's one way that you can make your target prices for your put options. And one thing with all of these patterns, you can't really predict how long it's going to take for this to happen. All you can, it just gives you a better educated guess on if the stock price is going to go down in the future or not. You can't really give a time frame of how long that'll take for it to happen, but you just know when you're seeing this pattern, it's more than likely that the stock price is going to continue to go down or up, and depending on which pattern you're looking at. All right, so I made this slide, like I made this presentation a while ago, and when I made this presentation, I wanted to give an example of a falling wedge that is rising wedge, excuse me, that is potentially happening. And this was back in last year of 2022 in September when I went over this pattern. And as you can see, this is the S&P 500 SPY, and this is on the daily chart. And we have this rising wedge that we have forming. And now I know that my resistance line isn't necessarily touching these areas. However, all I needed to do was just take this line and draw it from here, and we can have touches. And as you can see, we have multiple touches, right? We can call this a touch. This is another one. That's 3 resistance touches that is happening, where the stock price is making a higher high and is pulling back, making us a diagonal resistance line. And then for the support line, we have a touch here, we have one here, we have one here, and then we have one here. And each one of those touches are making a higher high, okay? And so what you can do with that is, again, if you want to, once you see the stock price break out, as we have right here, we have it breaking out, pulls up. Once it has this test, you could have started saying like, okay, hey, if I invested in SPY at the bottom at about 360, now is the time for me to get out for this time period, right? Right now is a good time for me to get out and see what's going to happen, because it's looking like it's reaching its high for the moment. And if you was doing the put option, you can say, hey, now is my time to get in and try to see if I can make profit off of this downturn. And all you need to do is just, take it break out at about 420 and just go back through those resistance areas. So you have a support line right here at about 410. So we're saying we can see the SPY potentially hit 410, and then we're going to see it hit 400, and then we're going to see it hit 390. And then we can see it hit this 370 before it starts to try to turn around, right? So you can just use those as each one of your support lines to just keep drawing back and back. And we have a good indication that the S&P 500 was going to go down, not only because of the Fed's raising interest rates and we being in like a recession, but also with the technical analysis, you can see the RSI level is sloping downwards, and it's getting close to being oversold. So when it gets to that oversold level, we know it's going to eventually turn around. But however, for the time frame it is now, we're going to potentially see it continue to go down. And then we also have the MACD crossover, right? We have the black line below the red line, and that's signifying the downwards pressure, and the stock is going to go down. And then we have it breaking under the 50-day moving average, which is a strong line to break. And when it broke it, it's going to continue to trend down as well. Does that make sense? Do I have any questions? Okay, cool. Good. All right, so what I'm going to do really quickly is show you all what happened with that rising wedge pattern on TradingView. So give me 1 second to try to find that area. So I'm on the daily time frame. And this is where the rising wedge pattern that was in that order, that was in the presentation happened, right? So we have this rising wedge right here. As we can see, this is our support area. We can draw a support circle right here. This touched the area here. It tested it here, right here, and then right here. So we have more than 3 touches. And then again, I can draw my resistance line. Okay. And you see we have test here. We have a test right here. We have another test of the resistance area in this area. And then finally right here. And what we can do with all of those is, what I like to do is I like to just draw support lines for that. So I'm saying I know that the stock price is going to test this area. I know it's going to come back and test this area right here. And then finally, it'll try to test this bottom area. It may not test it. And if it does break under it, then you got to go even further back in the time frame to see where the next support line. But off of this trade, and I can do the, let me put the replay on so it's not. So this is how we would be looking at it right now, right? So if this was featured. Off of this trade, we have these support lines, and we're saying, hey, these are the areas that we think the stock will get to, and it's looking like this is what's going to happen. We have this MACD crossover that happened right here. Buying pressure, excuse me, the blue line is below the selling pressure, the red line, so it's in the downtrend, and it's testing this 50-day moving average. If it breaks under there, then we're definitely going to be in the downtrend. And if we just play it out, we just skip it, we can see it broke past it, tested those areas, and as you can see, it's here. It broke under this support line. It's going to test this support line again. It rejected it. Stock price went down, testing this new support area. So it treated this as this resistance zone. It rejected it, broke down, tested this new support area. It's touching it, broke under that finally. So now this is now our new resistance area, our new ceiling, and then this is our new floor. It's rejecting it, so forth and so forth. Does that make sense?
Yes.
Okay, good. All right, so back to the slide. All right, so here are the rules that I created for myself when I wanted to distinguish if a pattern was in a rising wedge. Again, the first one is the trend. It needs to be in the uptrend. The second thing is I need to draw my diagonal resistance line. Then the third one is I need to draw my support line, diagonal support line. The fourth thing is you want to see that cone shape. It's not going to always make a cone shape, so I can kind of take that out, but I just have that in there. But you want to see it potentially make a cone shape. And then the fifth thing is you want to wait for that resistance break. So if you're getting into those option plays, even if you're just taking profit, I like to wait until I see that and I put resistance break. I meant to put support break. I want to see the stock price break that support line, because if it breaks that support line, I know that's going to continue the downtrend. That's when the downtrend is going to happen. And once I see it break that support line, that's when I'm either, if I'm trying to take profits on the trade that I recently got into, I'm going to go ahead and take profit there. Or if I'm trying to get into a put option, I'm going to wait until I see the stock price retest that area and start to break down, and then I'll get in there to do my put option. And if you wanted a deeper analysis on this pattern, you can always go to investopedia.com and just type in the rising wedge pattern, and the article will pull up, and they'll talk to you about who derived the pattern, the success rate, and how you can trade it as well. So if I don't have, does anyone have any questions? All right, so what I'm going to do is I'm going to pass it back over to Ladarius, and he's going to go over his stock picks for the week.
All right, cool. I appreciate that, Mark. I do have a couple of stocks, but we'll get through them pretty quick. What I'm going to do is cover some stocks that have earnings this week. I know a lot of people are interested in those. And then we're going to look at one AI stock, and then some Chinese stocks, because I think that a large part of our economy and the global economy is waiting on China to fully reopen, and then to get China back rolling, so then we won't have any supply constraints and things of that nature. So, and I think it'll help companies like Amazon and all the other companies that depend on like shipping services. So let me share my screen here. Hold on a second. Yeah, I'll just share this one. It's cool. All right. Let me see. Is it sharing my screen? Oh, there we go. Okay, cool. All right. So companies that have earnings this week, right? Let's look at, we're going to start with Meta. So Meta, formerly known as Facebook, they have earnings this week. We're looking at them on the daily, and that RSI is crazy on the day. That's a 74 RSI. Again, a 70 RSI is normally where the stock turns around. So it's overclocking, is extremely hot right now. And if you look at this MACD, it's doing the same thing. It's hot. So the stock could potentially get up to an 80 RSI. Am I going to touch this at a 74 RSI? Probably not. If I do touch it, I'll be looking at a put, again, like Mark said, which would be a bet that the stock is going down because it's way oversold on the RSI. Even if they beat earnings and, we get a pump there at what, 151, let's say they beat earnings and they pop up to, they have resistance at. And let me set these resistance levels as well. Well, I'll walk through how I'm setting them up. But if they go up to about 160, the RSI is going to be about 80, 81. But eventually, what goes up has to come down. And then there will be an opportunity to short the stock. So for people who play puts, there's a way to make money when the stock is coming down. Now, if you're looking at adding Meta to your portfolio, what I would recommend is paying attention to this earnings. So we click on the E, we can see they have earnings on Wednesday. If you want to see if you're interested, just tap into the earnings. Like if you have Robinhood, or I don't know what trading platforms most people use. I use Fidelity and Robinhood depending on what I'm doing. But on both stocks, they have a way for you to click on the stock, check out the earnings, and then you can actually listen to the earnings call. Especially if you're looking for investing in the stock long term, I would recommend checking out the earnings. But with earnings, that's either going to boost the stock up or bring the stock down. Meta has seen a rise lately because TikTok has been getting banned on college campuses, and it has been getting banned on government issued phones. So the more that they ban TikTok on different devices and different locations, the more people are going to use Instagram or Facebook in those locations, right? Because if people are just looking to post content and they want it to go viral, they'll move from TikTok and go to Instagram. Most people who are on TikTok already have Instagram accounts or Facebook accounts anyway. So I think that that's a good catalyst for the stock in the future. Right now, the stock is testing. So again, green for me is a 200-day moving average. It's testing that 200-day moving average. If it gets above its 200-day moving average, that's going to be a really bullish sign for the rest of the year. I may look at adding shares. I'm going to listen to the earnings call. I want to see what they have planned. I'm hearing a lot of talk about AI. So I'm going to be paying attention. But they have earnings. Pay attention to their stock because Meta. So in the S&P 500, you have top 10 stocks, right? And Meta, well, I'm not going to say top 10. You have top 20 stocks, right? And so Meta is somewhere in the pack of the top 20 stocks. And if Meta goes down, it's going to have an impact on other social media companies like Snapchat. And it also will have an effect on the S&P 500. For instance, if Apple goes down, it's going to have an effect on the S&P 500 because it's the number one weighted stock in the S&P 500. But let's set some resistance since we're running high. So I would choose this area right here to set. If we beat this, what is this, 153 on the 200-day moving average, you can see why I picked this as a resistance, because you can see the stock before it dropped here and then fell off here. You can see that it floated around here for a while. Again, each candle represents a day. It dropped and just bounced. It just kept bouncing on the same point. So going up, that's going to be its resistance. If it can beat that resistance, then we can set another one here. And you can see why I said it there as well, because the stock going up tested it, rejected, tested again, rejected, rejection after rejection. It finally broke through, came down, tested again. So this is what I have as far as the upside. So now on the downside, let's draw a floor here. We can pick a floor right here. Again, same reason that I picked that floor there. And if you just want to add one more, add one around this area, you could bring it up a little bit to about 125, 126. But this is the zone, the trade range for the stock. So if they because again, they don't have earnings until Wednesday. So we still have Monday, Tuesday, and then they have earnings Wednesday after hours. So that means the market has to close, and then the effects of the earnings that happen won't show until Thursday morning at 9 o'clock. So again, if we still have momentum to the upside, we're going to be testing around 153 to 155. If we can break 153 to 155, then we know that we're going to be stuck in that range between 155 and about 170. So this is definitely a range to watch. We can see that we didn't had a lot of green, a lot of buying volume. You can see the stock has been just ripping since it broke out of the around 115, 120 range. And then it doesn't look like we're going to have a MACD crossover soon, but with that RSI being high at 74, eventually that's going to cool off, and we can expect a MACD crossover in the future. So this is going to be an interesting one to watch just because of that high RSI, and these are the zones that I have. So what I'll do is post these charts in the Discord. I'll do it once Mark cover his charts. But these are the zones that I have lined out for the stock. Again, TikTok being banned has made the stock go crazy, and if they continue to ban TikTok in more ways than they have already, then we can see Facebook easily back up to $200, potentially $300. I said Facebook, Meta at $200 to $300. All right, let's move on to Ford. All right, Ford. So Ford is making a bullish flag. I think we talked about that last week. These lines are from last week. So a bullish flag, to make it really simple, if you want to, let me see, I can draw some trend lines here. The bullish flag on this, and I'll just draw it through the candles to keep our eye on it. All right. So we have this I need to lock it. All right, there we go. So we have this rise up. So in a bullish flag, what you're going to have is going to look like this, right? It's going to go up, it's going to come down, and then once it goes up, it's going to need to clear this point right here, and then the stock can move higher because it has momentum to move higher, right? Right now, we only have a 57 RSI. If we can beat this point around 59, then the stock can move up to potentially 65. What's this point right here? Yeah, this 64.77. So we could see the RSI move up to about 65, potentially 70. So we have this rise right here. Let me get another line. I can just Alt T. That's me. All right, so we're going up. Oh, that's an ugly line. All right, so we got up, down, and then I can Alt T. And then we're going to start. Let's start right here. It didn't give me my trend line. Give me 1 second. All right, and then we're going here. So starting here, draw the line down here. So again, once you have this form, up, down, up, if it breaks, if it clears this zone right here at the top of this candle, then we're going to move up. And when we move up, we can draw, where are we at? I want to pick my resistance. I'm going to do top side. All right. So if we move up and we get this spike above it, we can pop out and we'll go up to about 14.15. The thing is that if we reject, this is a 200-day moving average that we're going up against. If we hit this and we reject, the stock is going to bounce down. And let me show you which direction. The stock is going to bounce down and move in this direction here. right? So it's gonna, I picked this as my stopping point because this is where the stock bounced before. It dropped, it bounced, and it went up. And if you look back here, let me put my, if you look here and you look previously, not right here, right here it checked in, right here it checked in right here, here, and here. So if it goes up and it breaks through, we can move up to a little bit above $14. If it rejects, then we'll be pushed down and we'll be back around $12, almost $12 even, around $12.15. So watching this MACD, because the MACD is pretty close. If the MACD, if this pulls down and you can see a MACD crossover happening, what I would do is wait until the MACD crossover happens. If it gets around $12 even or $12.15, that would be a good entry because it has a high chance of bouncing off of this floor and then coming back up. So what you want to do is just keep an eye on this. Again, Ford, they have earnings. What is this? On Thursday. So they have earnings, but I think that Ford has been performing well. They're gaining in the department of EVs. People love the Ford, the Mustang Mach-E, and people love the F-150 Lightning. So as long as Americans love pickup trucks, right? And if the only thing they did was get the F-150, which is the most popular pickup truck in America, and then just put EV components in it. So if they continue to just sell out of those F-150 Lightnings and continue to increase the price, then I can see Ford in the future, again, being back up in the 20 to 25 range. They also pay a nice dividend. Right now, they're paying about 15 cents a share in dividends. So I think that Ford is definitely a nice play. Again, the reason why we're talking about them is because they have earnings coming up soon, and we can either see them move up off the earning news, or we can see them move down. For those that have been here for a while, Ford is one of the companies that I used to turn $600 into $20,000 last January. I used a combination of Tesla and Ford actually had news that they were going to double the production of the F-150 Lightning. So, and it just sent the stock crazy. So anything surrounding that F-150 Lightning is going to be good for the stock. So I'll be paying attention to the earnings. I might just read the transcript to see if they mention the F-150 Lightning. And if they do, then we can see the stock again move higher to potentially, 15. What is it up here? Yeah, around $15 even. So another good one to add to your watch list. All right, let's keep it moving. All right, healthcare. Cigna has earnings as well. Again, you can click the little E. You can see what day. It has it on Friday. Cigna has been performing well. So last year, Cigna was going crazy while everything else was tanking. You can see, again, back here, what is that? In June, it was about $244. Cigna has been at about almost $340 even, and it has just been running. Also, Cigna, they pay dividends. And then if you look at their earnings, if you see any green E's, that means that they beat earnings. So we looked at Cigna 2 weeks ago. They've beaten their last, I want to say like 7 or 8 earnings. So it's safe to say that coming off a year like they had last year, that Cigna is probably going to beat their earnings again. The stock is down. It came down to around 300 even, and it bounced. Last time that it was around 300, I called it in the Discord. I think I got in around like 305, and then I sold when it came back up here around, actually I sold before that. I sold at about 320. I didn't want to chance it all the way up to 330 because it was risky, but we were able to make a small play out of that. So now that Cigna is down again, and is right now it's at about 308, there's potential for it to move up again. So this is an interesting one to watch. We also just had a MACD crossover to the upside, but you want to be careful because that MACD can cross back over to the downside. So this is, again, these are just ones to add to your watch list and check the news on the stock. So again, you get the little lightning bolt, and there's going to be a lot of news generated on Cigna coming up because everyone knows that they have earnings and they're a healthcare giant. So I'm always good for healthcare long term. Like if you want to invest in Cigna or United Health long term. They pay dividends. You know, they may be a little pricey, but you know, if you can buy fractionals, that's cool. But I think that healthcare, especially coming off a giant healthcare scare like, you know, COVID, I think that healthcare is, I mean, is just going to be around forever. I don't think, I think they're just going to keep making money. You know, it's going to be something else. It might not be COVID. It'll be, before COVID, we had Ebola, we had H1N1, SARS, you name it. It's always something. So I think that healthcare in the long term is going to do well. But this is another one that I'm paying attention to because I actually own stocks and I own shares of this company, and I traded it recently when it dropped around these levels again. So again, all of this will be in the Discord. If you have any questions, let me know. Also, the RSI is at 42.73, but it's pointing down. Again, I like 45 to 55 pointing up. So that's if I'm playing a call, or if that's if I'm buying the shares low and selling them high. So if you're looking for a put, I would keep my eye on the MACD. I wouldn't look at the MACD on the day. I would probably look at the MACD on the 4 hour, or you can check a 2 or 1 hour to see if you can play it to the downside. But Cigna, again, great company overall. All right, let's talk about AI. So if you've been on social media or watching the news, AI is starting to become a real thing now. And I think that C3 AI, the crazy thing is that their ticker is AI. I think that they will get a lot of traffic and volume moving forward. Right now, the stock is only $17, but you can see on this candle, again, this is a day. It went from $15 to about almost $18 in one day, clearing that 200-day moving average. But you can see that RSI is crazy at almost 80. So, and then look at the MACD. The MACD is going crazy as well. So it's a highly volatile stock. And look at that. We talked about volume earlier. Look how long that volume candle is compared to the rest of the volume sticks. It's going crazy. So why is it doing this? Why is this? And this stock may be a good stock to trade in the midterm. Right now, if you're looking for a put, this could be a good stock to short because, I mean, with a 79 RSI, it can't live up there, right? Now, I'm not saying it's going to come down tomorrow or, you know, whenever, but I'm saying that this is going to have to cool off at some point. It's not going to go to like a 150 RSI. At some point, this stock is going to come down. And the point that it's going to come down that it should be right around here, around $15, right? We can see that we went up and tested it a couple times, and if it continues to move up, we can see that this was the ceiling for it, right? It stopped right around its ceiling at about $18. So it actually touched 18 and came down. We have someone that's trying to join. Give me 1 second. Do this. All right, let this person in. All right, back to AI. All right. And so if it breaks this around 18, then we can see it move up to about right here, which is about 19. It could be potentially $20. But again, with a 80 RSI on the daily, that thing is it. It's probably going to cool off before. But I'm actually thinking about adding this to my long-term portfolio because I think that this stock could be $100 stock. The reason why is this article right here. So I'm not going to read this whole article to you all, but it talks about ChatGPT, which is a really popular AI platform, and it also talks about the deals that C3 AI has. So they have deals with, you can read right here. They have a $250 million contract with Microsoft and also working with Google. They also have Amazon that they're working with. This is just a small breakdown. It talks about the descending triangle and the fact that it's breaking out. But oh yeah, and the IPO highs of 183 that happened on December 1st, about 2 or 3 years ago. This just talks more about the descending triangle. So this talks about their business model. If you're into reading more about the company, again, if you want to invest in it long term, I recommend reading this area to see how the company makes money. It talks about their competitive advantage. And then they also have various government contracts with the Department of Energy, Health, and Human Services. So this company This company could blow up again with all of the hype around AI. I mean, I went to a drive-through. When was that? It was like 3 weeks ago, and instead of having a person talk to me through the box at the drive-through, it was literally an AI talking, and it felt weird. I'm not gonna lie, because I'm like, what if I need extra ketchup or mustard, or like, how can I customize it with this AI? But it was just talking to me. I gave it my order, and then when I got to the window, it was an actual person there that gave me my food. But I realized, like, oh, okay, like we're, society is going there now, right? And I think that just like when the electric vehicles took off, Tesla was the first to market. Well, they weren't the first to market, but they were the most popular stock to market, and they blew up, right? So I think that looking for AI plays is definitely going to be beneficial, especially for trading and investing. So C3 AI is one of those companies. You can also look at Google. You can also look at NVIDIA. Those are some of the giant companies, but a company that has potential to potentially 5 or 10x your money. So for every $100 you put in, you get $500 to $1,000 per $100. This company could be one. A good reason, again, its ticker is AI, right? So if people are looking for AI companies, you just type in AI. This is going to be the company that comes up. So it's going to get a lot of traffic off its ticker alone. Again, they do have good deals in place, and they have a good outlook moving forward. So what I'll do is copy this link and put it in the chat real quick. So if you want to read more, up more about this company, there you go. All right, last two companies. So I said I was going to talk about China. Again, China, I mean, a lot of for whatever reason, a lot of Americans, they don't like China. I guess for whatever reason, or rivalries, trying to be number one in the world as far as an economic global power, so on and so forth. But there is definitely an opportunity with Chinese stocks. I remember when Alibaba was around $60. Alibaba now is around $120. I put this line at about 130, like a month ago. I think about a month ago. So right now, we went up to right here, and you can see that we rejected a few times in the past. So this line checks out. We went up to about 120. We turned around, and we can see that we've been bouncing around 110, 115-ish in this area. So the stock has been bouncing around. The stock can pull down. We just had the beginning of a MACD crossover right here. So if we can flesh out that MACD crossover, we can even be a little bit more granular and put a line right there. So we can pull down from 120. We can check in at about 115, and then we can probably come on a little bit more down to about 110 before it moves up again. So the reason it's doing this, there is some news floating around, but it's not anything crazy. But the RSI, again, is cooling off. Like, we had an RSI that was up here at about 75. It came down, and then the market rallied. It pulled up, and now it's cooling off again. So I think that it's going to cool off a bit before it moves up again. But this is a good one to pay attention to, because Alibaba is one of the most popular Chinese stocks when it comes to the New York Stock Exchange, right? Also, we have this 50-day crossing over and getting above this 200. So that means that now we have a golden cross, which means that the stock is probably going to move up in the long term. Anytime you have the 50 on top of the 200, that's extremely good as far as the moving averages goes. So we got this 50 on top of the 200. The stock is cooling off, which is perfect. We just need the stock to cool off a little bit more. I'll even take a 60 RSI on this stock, because it came from about $60, and there's a lot of good things that this company is doing. This company used to be about $350 to $400 a share. So will this company get there again? I say yes, but this is like the Chinese Amazon. That's the reason why I'm saying that. But I think that it may take this company, let's say, 3 or 4 years before it gets back up to $400. So this is one to keep an eye on. Again, we have this MACD crossover to the downside, and we have the zones listed right here. If this MACD crossover continues to stretch it out, we're going to be pulled down, and then we can find a point for where the MACD is about to cross over to the upside again, and then we can go ahead and make a play to the upside. So they also have earnings. What is this? On Wednesday. So Wednesday is going to be a crazy day. You got Apple, Google, Amazon, Facebook is somewhere around there, and then you have Alibaba as well. So it's going to be a very, very interesting week. And then you have Jerome Powell speaking to top all that off. So, but again, Chinese stocks, people are sleeping on them, but I think Chinese stocks may see some of the largest percentage growth on the year because they've been down in most. All right. Last stock before I hand it over to Mark is NIO. All right. So NIO is pretty much the Chinese Tesla. This company is backed by the Chinese government. And they give them subsidies. They pretty much give them whatever they want to make the company run because they need a competitor. Tesla is American. And then we also have a lot of other, we got Lucid. We got a lot of other companies as far as EVs that are American that's leading the way when it comes to EV. So China is working with NIO, and NIO is starting to come back up. Again, NIO was being brought down just like Alibaba was because they had some political issues they were going through. But now we can see the stock has recovered its 50-day moving average. And at one point, it popped up above 14 and came back down. But it rested right on that 50-day moving average. And now we're bouncing off and moving back up. So the stock in the midterm, this is not short term, we can get back up to about $15 before testing that 200-day moving average. And if we can beat that 200-day moving average, I think that the stock could get right around this area. So around about 17.50, we could see NIO move up. And again, right now on the RSI, we have a 59. So this is one to pay attention to. This is one to put on your watch list. And again, it's moving with the Chinese government and it's moving with Chinese stocks. So when Chinese stocks move, all of them are moving together because they're all in the sector and they're all being affected by the same political issues. So as those political issues they start to figure it out over there in China, it's good for the world, but then it's also good for these Chinese companies. So again, this is just one to pay attention to if you're interested in Chinese stocks. And do I have any questions before I hand it over to Mark? All right, cool. I take silence as a no. And I'm going to hand it over to Mark.
Appreciate that, Darius. Give me 1 second to start sharing my screen. And before I start, like Darius was mentioned earlier, this week is going to be earnings week for a lot of big name tech companies such as Apple, Amazon, you got Google. I'm gonna put an article in the chat right now. It's not more so an article. What this is just basically a website where you can go and you can view the upcoming earnings for the companies specifically for each day. So let me share my screen.
Thank you.
No problem. All right, so this is the NASDAQ.com website. And again, this is the earnings calendar. You can also type in specific companies. If you want to see what day that specific company is on, you can go right here and type in their ticker. But you can also go through each one of the dates. So this is for February, January 27th. Monday is January 30th. So you can just click on January 30th and it'll pull up all of the earnings for that day and which companies have them. It doesn't tell you what, if it's after, oh yeah, it does, excuse me, I misspoke. So this moon is letting you know it's after market hours and the sun is letting you know it's pre-market. So it'll let you know if it's in pre-market, after market, and then this circle with a dash is going to be midday. So it's during lunchtime, during market hours, okay? So they have that there for you all. And like Ladarius stated, Facebook is going to be opening up like the big name tech companies next week on the Wednesday, February 1st, aftermarket, and then they're going to be followed by Apple, Google, and Amazon. So this is going to Tuesday is going to be very key for the market. We'll probably see a run up, like what Darren said, and all for all of the tech stocks as they're getting close to anticipation of the Facebook or Meta's earnings report. So you're going to probably see an uptick in the stock prices. Okay. And so with that being said, I'm going to get into my first stock, which is Tesla. Let me clear this up. Excuse me. All right. So Tesla had their earnings last week, and while they didn't necessarily, they didn't beat their earnings. Well, they beat on earnings report EPS, but they lost on revenue, and they only lost by a relatively small amount. Most of the time when you see a loss, and the fact that Tesla didn't have any guidance for any good guidance for the upcoming quarter, other than they're just going to try to produce like 50%, become more efficiently producing Teslas 50% more for the upcoming quarter. Normally you will see a downturn in the market because they didn't meet their revenue goals. However, the fact that the investors thought that Tesla was going to do so bad, and the loss that they did take wasn't what they thought it was going to be, so Tesla kind of went up in value. It's been trending upwards. Okay. And with that trend up, as you can see, we have this huge spike, right? So this huge spike is not all because of the earnings, and we'll get into that. But one thing I do want to note about earnings is, like Ladarius stated, I don't necessarily like to play earnings, and this is just because you don't know what's going to happen. Once that earning report comes out, if you're in like an option trade, it's a 50-50 chance you're going to be correct or you're going to be wrong, and you lose like all your technical analysis. They go out the window once the earnings report comes out. So for me personally, if I'm trading and I know that one of the stocks that I'm trading, I'm doing options with, are going to have earnings coming up, I'll trade that stock up until the day of their earnings. Once their earnings report is going to happen, so if it's aftermarket, I'm making sure I'm out of that trade before the market closed that day, and if it's pre-market, I'm making sure I'm out of the trade before the previous day closes. Right? Okay. So that's that. I was going to say. Okay, so this huge uptick in Tesla wasn't just because of the earnings. This also happened because of Lucid. So if you don't know, Lucid is another EV company, and they produce luxury electric vehicles, and they're potentially going to go private, and they're going to go private with Saudi Arabia. And what that means is that basically everybody that holds shares of Lucid, if they was to go private, all that's going to happen is you're going to get cashed out. They're going to pay a certain premium. So let's say Lucid is at about $12 right now, I believe. And let's say like Saudi Arabia may choose to sell the shares to the consumers, to the shareholders, at about $20. So you'll have that increase in value from $20. So you won't see any, like, they'll just pay you a premium to take your shares away, and then they'll go public. Or excuse me, they'll go private. And I also have an article about that if you wanted to read. I'll put that in the chat as well. And this is on investopedia.com. I like to use investopedia.com because they have basically all the answers you'll ever need for any investing questions you may have. You literally just type it in a search engine, and there's probably an article about that. All right, but let's get back to this technical analysis of Tesla. So right now, I see Tesla potentially doing the cup and handle pattern. So cup and handle, basically, if you don't know what cup and handle pattern is, the stock price is going to form a cup shape, just like as you see here. And then once it reaches the top base of this cup pattern, you're going to see the stock price go down in value a little bit, just like such. And it's going to make a cup and then a handle. And what happens is when the stock price breaks above this handle pattern, it's going to start to increase in value. And you can kind of determine where the stock price is going to get to by taking the difference from the top of this cup to the bottom of this cup and just add it to that value of the price. So what I mean by that is once we see Tesla start to decrease in value and pull back, what'll happen is we can take this price where it'll be, maybe it may get up to about 190, right? So we'll say 190 is the top of our cup, and then so 190 minus the bottom at about 100, is a $90 increase in value, right? So once the stock price creates that pullback and breaks out of that pattern, you just add $90 to wherever that stock price is at, and then that'll be your target price. So let's say if it breaks out at about 178, you add 90 to that. What's that? 270. So you can potentially see Tesla back up to about 270, right? So that's what that means. And this is on the weekly, so that's going to take a while for that to happen and for that to complete. But for the time being, the reason why I feel like that this can happen is just because of the technical analysis we have here. Again, we have a strong crossover that's about to happen on the MACD, and this blue line, which is my buying pressure, is about to cross over my red line, which is my selling pressure. Okay, and so when that crosses over, the fact that we are trending above our 200-day moving average, it broke under there, it rejected this price, it shot up because we broke under, because we're above that 200-day. That may cause this to rocket up, right? And if Apple and Amazon, if this is a good earnings week for all of them, you're going to continue to see Tesla continue to trend upwards. So we have that crossover that's about to happen. We have an RSI level that is sitting at about 44 RSI, a little bit out the sweet spot, but not out by a lot, and it's trending upwards. So it's pointing upwards. That's another bullish indicator that the stock price is going to go up in value. And then this indicator I have here, he didn't speak about this one. I don't think he uses it, but this is the stochastic RSI level. And what that basically is saying is just that this is like the RSI level on steroids. So just how the RSI level has a oversold region and an overbought region, this has the same thing. So this is this overbought region. Here's this oversold. And the fact that it's trending upwards, for the most part, with this indicator, you're going to see it fluctuate in between those two zones a lot more than where you'll see the RSI level. All right, so this is just letting you know the RSI for a short term. So this isn't taking a whole bunch of data like this RSI level is. It's just letting you know the RSI for the short term, and the fact that it's trending upwards to being close to, it's trending upwards to try to become overbought. That's going to cause this stock price to rise as well, right? So this is just going to have the buyers. This just means that for the short term, the buyers are really bullish on this stock right now. And example of that is, as you can see here, the RSI level is at 50. The stochastic is being oversold. Once it starts to trend upwards, you see we have the stock price going up. It reaches this overbought level. It has to cool down. And when this one cools down, it doesn't just go like to 50. It normally goes all the way back down to being oversold. And you will see that in this as well. So you can use that as well. Is that making sense? Do I have any questions? Okay, so let's say Apple continues to go up. These are my support lines that I will have for Apple. Okay, so I have a support line. My next resistance area is going to be here at about 200. All right, so this is my resistance area. So from 177, I can see Tesla getting to about 200 and make that my resistance area. And if it does get to 200, that's when we're going to see the stock price try to trend downwards and try to make that handle pattern, right? So we're going to see it get to about 200 and pull back. Now, as far as my support line, I have it at the bottom right now, at the bottom of this channel at about 110. That's going to be my week, and this is the weekly support line. If you want to be more conservative, you can raise up your support line and we can just draw back. As you can see here, we have about 130 is another good area of support. We have a lot of touches in this area. So you can make this your support, or you can have it at the top, 150. So you can treat this as your support because the price is all the way up here. We can have 150 if you want to be really conservative on your loss. Or you can draw it down to 130, 120. Okay, that's my support. But we're just, for the sake of it, to be more conservative, we'll have our support at 150. And this is all on the weekly. Let's look at the daily and see what's going on there. All right, so on the daily, again, this one huge candle is all because of Lucid, the news with Lucid, and they're potentially going private. That caused the stock price to go up as well. Yeah, we have a MACD crossover that happened. blue line is above the selling line. The buying pressure, the blue line buying pressure is above the orange or red line, the selling pressure is trending upwards. I have this high RSI level. It's a stochastic RSI level. And then our regular RSI level is relatively high, sitting at about 63. So I'm thinking that this needs to come down and cool down. It may go all the way up and touch 70 before it starts to cool down, being the fact that we do have earnings happening, right? So we do have the earnings for the big tech. So that may cause Tesla to continue to rise up in value as well. Again, 200 is going to be the area, the resistance area. So once it touches 200, I want to see what happens. And it still looks like it's, even on the daily chart, it's still making this cup and handle pattern, right? So it's still making the cup and handle on the daily chart as well. So we have this cup. It's going to probably touch to this 200 area. And once it touches 200, we're going to see it probably bounce up and down like such, make that handle, and then break out. Okay, so we probably see something like that happen. Or we may just see it literally go all the way down, test this on 155 hour, this area 155, and then break out from there. Okay, so we may also see that as well. So we may not see these tests as a resistance area, but this is more than likely what we will probably see. And with all of this, that's going to cause this RSI level to go down and cool down with all this selling that's going to happen, as well as this stochastic RSI level. So if you want to get in a trade, again, I'm going to tell you to probably wait and see what happens at this 200 range. Now, if you want to get in a trade, buy here, or buy when the market first opens, maybe pre-market if you can, if you're going to buy shares, pre-market, and then you can sell those shares at about $200. So if you buy one share, you'll make like almost a $23 profit right there, and then wait for it to come back down, because again, this RSI level needs to cool down. And then targets prices. So again, like we said, if this stock price was to break above this area, it's going to be two places where it's going to go and test. So it's going to first go and test this 200-day moving average, this red line. It's going to go and test this. So right now it's at 232. So that's my first target price. And then after that, we're going to see it potentially go and touch that 270. And that's the line that's the target price that we set from off of the length of the top of the cup to the bottom of the cup. Okay. So, and I'll turn, so my two levels for profit is going to be here, and I'll turn these to blue. So this would be my first target price area. And then my second target price area is going to be in this area at about 270. Does that make sense? Do I have any questions?
That made sense. Thank you.
Okay, no problem. All right, so so we talked about Tesla. The next one I have is Lucid. Again, Lucid, they have this news coming about the potentially going private, and this caused Lucid to spike. Initially, I once invested in Lucid. I sold all my shares because they just started to go down in value. But that was about at the beginning of September, October. Ladarius and I, we were trading Lucid heavily. We made a lot of money off of them. Give me one second. Go to the weekly. Try to fix this. So yeah, so right in this area, literally all of this, Ladarius and I, we was on the boat for all of this ride. We was doing options. We had shares of it. We was definitely in there. After that, again, a lot of chip shortages. Because of the chip shortage and because of Lucid being a new company, they started to decrease in value. That they were starting to touch their bottom in this area right here at about $5. And I was going to get into this trade, but I missed the boat on it. Again, I didn't know that news was going to happen. It was going to pop up. I was literally going to just buy for the long term. So I was just buying and holding. I didn't get in any shares. I wish I would have, because I would have been up relatively good. But however, let's look at what the charts are doing. So this is on the weekly. And as you can see, two things. The RSI level is trending upwards. It's popping upwards, right? So you got 47. Okay, and you have that stochastic RSI is trending upwards, trying to get to oversold, which is also overbought, excuse me, which is a good sign. And then we have this MACD crossover that happened. Okay, So we have that MACD crossover that's happening. And this is all on the weekly. But I like to, for me personally, I like to draw all of my main support and resistance lines off of the weekly chart, and then I go to lower time frames and trade off of that. So I try to trade the bigger trend when I'm getting into trades. So let's draw some support and resistance lines. So right now, from where the stock price is at, I have support. If it was to fall down, it's going to go ahead and test this $6, $5, $5.90 range. So we'll just call it 560. So it's going to go and test this range right here, and I'm going to turn it green to signify my support. And then my resistance area, so the stock price is at 1286. I see strong touches in, see the stock price tried to test this area multiple times, and even here, it tested this area, rejected it. When it was trading upwards, or when it was starting to trend downwards, this was an area where it tested and tried to reject price, right? So it tested here, started to trend upwards, tested again, trended upwards. So it took a while for it to break this 1470 line. So this is going to be my resistance area right now. And if it was to break my resistance line, the next place that I see it going is going to be this area. And I'm going to turn this area blue, signify a target price. So if you wanted to get into a trade, a swing trade, you can buy now. And then once it breaks this resistance area, you know your target price is going to be 1950. It's still relatively risky because Lucid is a new company. So let's say you buy in here and you see that the stock price breaks. It tests this resistance line, it pulls back. My next buy spot for me personally, because I'm gonna try to treat it as a long day trade, a long-term trade, is going to be at this $5.60 mark. So once I see the stock price get here and it rejects price and starts to trend back upwards, I'll buy more shares just to average down my cost to where it's currently at. Okay, does that make sense? Any questions about that? Okay, good.
So you would buy, this is Lucid, right? Is this the company that's going private, that may go private?
Yes, correct. They may go private. Right.
Okay.
So if you're buying shares of this company, let's say we buy it at $12, when they go private, they're going to have to, Saudi Arabia is going to pay us a premium. All shareholders a premium, and the shareholders with the most, shares of this company gets a vote in it, and they decide the price that they want to sell it for. So let's say you buy in at $12, and the premium, Saudi Arabia is going to pay $25 per share that you have. So if you have 2 shares of it, it's going to be now worth, 2 shares at $12 is now worth $50 for those 2 shares. So at $24, you basically 100%ed your money.
Gotcha. Thank you.
You're welcome. All right. So next stock. Next stock is going to be Apple. Okay. So I have some lines here. I've been talking about Apple for a while now. This is on the weekly, literally the past 3 weeks, I've been telling people to get into Apple because they was testing this support line that I had drawn here. I drew this support line literally like 3 weeks ago, and I said start buying into Apple. And I was in a Apple option that I made 100% of my money back just off of these 2 candlesticks right here. So I waited to this green candlestick. I saw this green candlestick. The next week, I started to trade the option. I had my strike price at 145, and I literally said I set it out for 2 weeks, and on Friday of the last week, last day that it was expiring, it was at 145. I got out before that happened. I got out probably on this candlestick. This is the weekly candlestick. So on this week, I got out Monday, and I was up 100%. I can't remember what it closed at 145 for February, but you probably would have been up maybe, I think it was 700%. So you could almost, 700% on the option is pretty good. I do think that Apple is just like Tesla. The charts look relatively the same. They have on the weekly this MACD crossover that's going to happen. And if that crossover happens, again, we're going to see some pullback potentially. But then after that pullback, once it starts to trend back upwards, we can potentially see Tesla first test this, this is Apple. You can see Apple test this range we have here at about 150, and it'll be it'll break that 50-week moving average, and then after that, I have it potentially going to about 170. Now I'm currently in a option play for 170, and I'm not sure if it's going to happen. I kind of forgot that Apple had earnings coming up, and that's the reason why I was in the trade. But I'm just going to stick with it. But I don't recommend trading with earnings because you don't know the outlook of the company. So if Apple has any bad news that's going on, even if they beat their earnings, that bad news or that bad outlook will cause Apple to drop down in value. Okay. So just be wary again of earnings. I stress that a lot because I've lost money, a lot of money trading earnings when I first started out. So thinking that I can make a quick dollar just playing earnings, but be careful with that. All right. So that's the weekly. And again, it's probably going to look, the daily is probably going to look just like Tesla, and it kind of does, where we have this cup and handle forming. It's literally touching its top. We're going to probably see it pull back. And when Apple pulls back on the daily, we may see it get to about 138 before it starts to turn around and try to trend back upwards. Okay. Any questions about Apple? Okay, good. All right, so the last stock I'm going to talk about is Amazon, and then I'm going to open up the floor. Well, actually, because we're kind of out of time, so I wanted to see if anyone has any stocks that they wanted me to look over. No stocks? Okay. All right, so I'll just go over Amazon and then close it. All right. So again, Amazon is another company. They have earnings coming up. So this is the current stock price is 102. Have support at about this area, and if we go back, we can see we have a lot of touches in this area where the stock price tested this area and it either went up or rejected from it. So 95 is a good support line for it. If it was to continue to trade upwards, it's going to go ahead and try to test, excuse me, this 110 line, and then after it hits 110, we're going to potentially see it try to get to 120. And again, with Amazon, this is one of those companies that you can treat as a long-term trade, just like Apple. The only difference is with Apple is that I would consider investing in Apple more just because Apple right now is paying dividends. So you can always, if you're buying an Apple, anytime you get those dividend payouts, you can just turn on recurring investment, and they're just going to keep putting those dividend payments back into Apple, and that's going to build your shares more and more over time. That's why I like Apple a little bit more than Amazon. But Amazon is still a great company to invest in. And again, right now we have this MACD crossover, and this is on the weekly. We see that we had the crossover happen. The stack RSI level is trending upwards, and it is in the oversold region, but it may trend up there a little bit more for the remainder of this week, or at least until Thursday when they have earnings, and then it may pull back from there, right? And let's look on this daily chart. So we have here, what's going to happen is we can potentially see Apple, excuse me, this is Amazon. We could potentially see Amazon reach about 109, 110. And what's going to happen is that's going to become this 200-day moving average. And we can see what happens from there. So when it hits this 200-day moving average, it's probably going to try to reject this price and start to pull down from there. Okay. Any questions? Okay. Does anyone have any stocks that they want me to go over once again? All right, so I'm going to go ahead and hand it off to Ladarius, and he's going to close us out. I appreciate you all staying with us as well.
Thank you.
All right. All right. Cool stuff. I know we covered a lot, and we held y'all a little bit over. But we were able to, cover some really important information, especially with the week that we have coming up. This week is going to be one of the most important weeks of the quarter. because we have, again, I mean, if you check out the earnings calendar and just see, like, we have Starbucks having earnings, we have Allstate, Aflac, like it's, I mean, all of the, I mean, McDonald's, all the companies who like they have brands that you know about, they're probably having earnings this week. And again, we have Jerome Powell speaking right in the middle of it. So it's like figuring out, like, if everything works together, this can set us up right for a potential bull market for the year. But if not, all depending on what Jerome Powell says, then it could give us a dip for the next, I would say, 3 to 6 months. But then after that, we'll be back because the market wants to go up. You can just see it by the volume on the stocks. You can see it by the cash inflows. There is billions and billions of dollars like being pumped into the market, especially since January 1st. So is, again, just pay attention. Again, if you're in the Discord, we'll be talking about all of this if you have any questions. If you're not in the Discord, that's fine. Again, these sessions are always going to remain free, and we'll see you next Sunday. So if anyone needs a demo of the Discord, just hang around a little bit. I've added the link to our Discord in the chat. Again, it's $25 a month, and it comes with a 14-day free trial for a limited period of time. We just changed that. But again, if you have any questions, let us know, and we will see you all next Sunday, or we'll see you in the Discord for our Discord members. All right, y'all take it easy. And I'll wait around for if anyone needs a demo.
I'm hanging around for the demo, if that's okay.
Yeah, that's fine.
Great.
No problem. All right, we'll give it a few more, and I'll record this as well. Give it about 2 more minutes for everyone to leave, and then we'll go ahead and get the demo going. All right.
Yo, Darius.
Yes, sir.
Yo, is there a way I can get the recording?
Yeah, it's gonna be on our YouTube.
Sorry, on YouTube?
Yeah.
There's a blank check page or something?
Yeah. The blank check group on YouTube. Mark.
I'll post it.
Perfect. Appreciate that, man. Yeah, Adam, he'll get you the link in the chat.
I appreciate it.
Cool, no problem. All right, so let's look at the Discord. Give me 1 second. Which screen do I want to share? I'll share this one. Oh, are we sharing the screen? Oh, 1 second. There we go. Okay. All right, so this is our Discord. This is the blank check group. This is one of our channels. This is the stock chat channel. So this is where we're talking about stocks. We're looking at stock information. We have someone talking about calls versus shares. I posted the economic calendar so we can look at reports together. This is someone posted a meme because someone was trying to get into the meeting and they couldn't get in. So we have labs here time to time. We also have, so this is our stock section. So our Discord is broke up into a couple of sections, and you get all of this for $25 a month. So we have stocks. It's loading. I have all this other stuff going, but we have stocks. We have, Ashley just sent me a message. So we have stocks. We have surveys. So for those that don't know about surveys are focus group surveys. They're not your swag bucks or whatever the other kind of surveys are. These are focus group surveys and taste test surveys. They pay anywhere between $50 to, let's say, $500 an hour. I just did a survey last week. They paid me $300. And then I did another one. They paid me $75 for 30 minutes. So What I like to do is when I get money from those surveys, I will trade options with it, or I will buy dividend stocks. Like I was looking at buying Target, bought some Target. What was that? At some point last week. But surveys is a good way to make additional side income if you're interested in that. We also have a budgeting chat, but we're probably going to sunset that in just a second because people like to use apps for budgeting. We do have Forex. We have a resource library to where, let me click on this one. We have a resource library to where people like to share books, people like to share investment tips, people like to share lifestyle tips, whatever. We have all of that here, podcasts, YouTube videos, you name it. We also have our wins and losses to where we post our wins and losses. And then we have a crypto section. So we do have different content creators that are teaching different things within our Discord. Again, you get access to all of this for $25 a month. So Sean is our crypto content creator. He is posting crypto plays all the time. So if you got any questions about crypto, he's the guy to go to in our crypto section. What else? We have scheduling sessions. So if you want to schedule a one-on-one with us, you can schedule that with us. We do have our links. This is just a chat log of people asking us questions before we had our links. Here are our links. So the links are going through Calendly. So if you need a one-on-one for stocks, crypto, budgeting, whatever it is, you can click the links for the content creator, and then you can schedule the one-on-one with us. And then we can walk through plays, options, stocks, you name it. It's all included. We also have a course marketplace where we have our list of courses. So for those that are interested in learning like the basics of the stock market, I have a course called Stock Basics in 60 Minutes. This is my best-selling course because people they have a hard time understanding where to get in, where to get out, and then understanding like what exactly is the stock market, right? And how like stock psychology, like how to think about stocks and how to build a trading mentality. So this course I made a while back, but it teaches you everything that you need to know about the basics of stocks. And then it also teaches you about swing trading to where you can go ahead and be able to buy stocks low, sell them high. Now, if you're interested in options, this is my simplified option course. It covers how I turned, it covers the techniques and strategies that I use to turn $600 into $20,000 in 2 weeks. Again, I did that with Tesla and Ford. So Tesla was making a falling wedge. I bought the bottom of the falling wedge. The contract was $610. I bought that contract. Tesla spiked up. Tesla spiked up and kept running for 13 days. On the 13th day, I went from 600 to 8,300. So I got out. I was like, okay, cool, that's enough. I made $8,000 from $600. And then I took that 8,300, and that the next day, that's when Ford announced that they had the F-150 Lightning production increase happening. And so Ford was spiking. I took that whole 8,300, put it in Ford, and I made a little bit over $12,000 in one day from day trading. So the simplified option course teaches you chart patterns, strategies. It just makes options simple. And this one's about an hour and 30 minutes long. But if you're interested in options, we also have that as well. And then we have Mark's course, the Opinions to Income, where he teaches you how to set up surveys and actually get paid from them. Like in December, I made $1,700 from surveys. This month, I wasn't able to do it because I still, run the Discord, my 9 to 5 and personal life stuff. So I set a goal for myself to make anywhere between $500 to $1,000 a month. And this month I'm at like 770 or something like that. But his course is really good, and people really love his course because it's really simple. It's about 30 minutes long, and it teaches you how to get into these surveys. What else? Oh, we have a watch list. I skipped over this. Sorry. So our watch list, we give chart breakdowns, but in a verbal form. So we're not talking over the charts. You can see I post charts. We post the levels. We give you the RSI. We give you our ideas around them. And we like to do this weekly. We also sometimes add news into it that goes along with the stock. So we try to give you a lot of information to go off of when you make trades. We also have, tripping over my words. We also have our options chat to where we talk about options. I called a forward play. We talked about forward for a while. I called a forward play, was it on the 27th? 1350 call for the 3rd of February. And I ended up getting out at 29%. I said that I would get out at 25% because it was a day trade, but I ended up getting out at about 30%, which is cool. Before that, I did a SPY trade. Yeah, I did a SPY trade where I hit 52%. Yeah, and then I got out the trade. So we talk about options. We talk about long-term investing. We talk about, everything that's relative to stocks, we try to talk about. Also, this is the stock helpful link. So if you're looking for all of our recorded sessions, every single recorded session that we've ever done for like the last, year, I think this goes back to December of 2021. This is every single recorded Sunday session that we've ever conducted. So if you just need, this is December 12th of 2021. That's when we started recording these sessions. And if you want to watch the sessions, you can. Each one of them are about 2 hours long. But this is where we house things. And then again, we're going to get back to posting these on YouTube. And this is what the YouTube post looks like. So you can see we have a lot of emojis here because people like when we post on YouTube. So we're going to be posting our live sessions on YouTube now. Do I have any questions about anything that I've showed you all?
So is this Discord desktop and for mobile?
Yes. Yeah. So there's an app. There's an app that goes for the desktop, and then there's an app for your phone as well. You can just download it from the App Store. But if you decide to sign up, it'll walk you through everything that you need to go ahead and get set up.
Thank you.
Welcome. Do I have any other questions before I stop sharing my screen? Oh yeah, we also have a podcast. I forgot to talk about that. We have a podcast where we talk about like how we actually, if you're interested in, aside from stocks and all the other great things we have, if you're interested in knowing like how we actually started this and hearing the stories that we went through of getting this started and, me and Mark's ideas around things, you can check out our podcast. If you subscribe to our YouTube, all of that stuff is on there. But that's a little bit. I'm just explaining what this is right here, a little bit more about us so you can get to know us better. But if I don't have any other questions, I'll stop presenting and let me stop recording.